Hey, what's going on? It's Chase at Everbullish here on Sunday, the Stock Sherpa on YouTube. Listening to a little bit of Lupe Fiasco featuring Jill Scott this morning. That song is called Daydreaming. I'm sitting here looking out the beautiful window at the lake, daydreaming about being out on it. But instead, I'm here bringing you the Sunday recap, and then we can get to that stuff later. So, Daydreaming, Lupe Fiasco featuring Jill Scott. Really cool song. And let's get right into it. So I just made my post today. This is going to be added to it once I'm done recording it. But if you go to everbullish.com, click on investing articles, you'll see my Sunday recap, and I'll be going over that information here with you right now. So we'll go investing articles. This is the Biden's tax plan edition. I didn't want to put any too catchy of words in here saying that I'm going to be making a ton of opinions on it because I'm not really fearful of this whatsoever. I'll tell you why just in a second, but we're going to recap the trades. We're going to go over some of the sectors that performed well, some of the trades that I made last week to success, thankfully, and some commentary. So first things first. So the current tax plan, just straight up, is very, 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 very accommodative to all investing. And so right now, I'm sure you're aware, but if you're not, 0 to 15% capital gains for the first couple tax brackets, 15% for the majority of all tax brackets, and then 20% for the highest earners over 500,000 roughly filing jointly. So that's changing. We're not sure what it's going to change to. In the most recent proposal by Biden and his team, and they're quoting it, or it's being called, as it should be called, the Biden cap gains tax. So the proposal is that capital gains tax will be raised up into the mid-30s. 38.5% is roughly what we're hearing. No one's coming out and saying exactly what it's going to be. And then when you add the Medicare surcharge tax for said individuals on top of that, it becomes 43.4%. So we'll call it 43.5% for the highest income earners. Now, here's my opinion. I don't think that's going to go through. Obviously, I don't think that's going to make it through Congress. That's too big of a jump from what we're currently at. And I think we can learn that the market showed that as well. The market sold off on Thursday when the news came out, and then was right back up on Friday. I think that the market knows, the black hand, the invisible hand behind the market, is showing that the market is accepting that this was already going to happen. First of all, second of all, it's a negotiation. So I expect that it'll land somewhere around 28.5 to 33, 34.5 at the most for high net worth individuals, or what they consider high income earners. And then remember, people like me have entire jobs and careers on how to avoid paying taxes. That's the biggest transactional cost in investing is the government, first off. So, most of these investment managers out there are going to know how to tax efficiently manage around that. But yes, that is definitely an impediment to growth and progress as far as easy money markets go. But no, I don't. My personal opinion, and I've been through this many times with other tax proposals in the past in my career as an investment manager. So anyway, that's my thoughts on it. Let's not let that squirrel the way we're going to trade and invest going forward. So let's keep reviewing things. Sector performance last week, not a big surprise. Real estate crushed it. Real estate was up 2.5%, just over 2%, and the S&P was down. It was roughly flat. It was down 0.13%. So the sectors that beat the S&P is always what I look at. I always look at the laggard after that, which is the worst. And unfortunately for me, it was energy again. So real estate was up 2%, as I mentioned. Healthcare was up 1.17. Industrials, just 0.5%. Financials and materials all beat the market. For a week of insane earnings like last week, and the fact that the market traded completely flat, I'm very bullish on the sectors that I'm trading, the ones I'm about to talk about, and also the fact that real estate and healthcare are leading. So we have one expansionary sector and then one defensive sector leading, followed by industrials and materials, which are basically moot, followed by financials. So that's a great thing for me. That just shows that the market's waiting for the play to be called, or I'm sorry, it's waiting for the snap to be made. They've already made the call. They're just not sure what's going to happen on the field, so to speak. So in my opinion, everybody's in the right position. We're just waiting for the play to begin, and that's going to be this week with the earnings that are coming out this week, and also to see what happens on the first trade of the day on Monday. All right, swing trades. So I profited last week. I know that I probably boasted about that on my previous videos. The LabU rinse and repeat trade works like a charm, and it's continuing. I did get out of that one. I got out of that one somewhere around 78, 79. There were a couple trades in there. The EOG trade I just scalped, but I currently own the option that I talked about in my last video, my last Sunday video. I was fortunate enough to have Lordstown Motors the ride October's go up just a little bit, but on those I just clipped them at roughly, I think, 9.5% and 12.5%. So I got out, holding some cash on the side. My big three trades this week, very simple. Holding on to the EOG option. I'm likely going to be buying FAES, which is the 3-time financial sector bull, and ERX, which is the 2-time energy sector bull. Energy, again, is the biggest laggard on the sector performance tab here. So I'm just going to keep dumping into it. If I can keep clipping on these swing trades, I'm going to keep clipping, and then if I can make double-digit returns in the week, I'm going to go ahead and do that too. So feel free to follow on those. We're going to be watching the price of oil. I know that I mentioned before, I wake up at 2 and 4 every morning and check the price of Bitcoin and other commodities, screenshot it on my Stockmaster app, and then review it in the morning. If we see a good movement in the price of oil, I'll go ahead and jump on those. If not, I'll just keep waiting for them to get juicier and riper. But yes, EOG is my favorite trade as far as company within the subsector or within the sector of oil and gas exploration. I went ahead and threw a profile up here of you guys on what FAES is. It's going to take too long to explain, and I am holding off on getting more followers to do a video worthwhile enough, with good production quality to explain in great detail what the 3 and 2 times levered ETFs do. But as you guys know, I almost only trade levered securities. To me, it doesn't make sense to have a minimal amount of reward for a negligible amount of risk. I'd rather have at least a little bit of juice inside of the trade. So I do have a fun profile up here on the screen for you guys, so you can just see kind of how these portfolios are constructed and what you're actually trading. 99% of the trade is just having the information available on how to best take advantage of the knowledge that you have. So I'd like for everybody who follows this channel to get involved in reading up on this type of stuff too. So that's enough of that. GBTC, that was a trade that lost last week that I mentioned for you guys, but it didn't lose very much, and Bitcoin got completely crushed. So I think it still holds my hypothesis true of the ETF that tracks Bitcoin trading at such a discount that even when Bitcoin fell, it didn't fall as much. So I still like the GBTC trade. I'm still holding on to that one, and it'll likely become a longer term trade. This morning, as I was typing this, Bitcoin was at roughly 50,100 or 51,000. But it's bouncing. It's not even, I wouldn't even call this a bottom. This is a flash crash. This is a sell-off. This is overexposure and euphoria to altcoins being made available through companies like Coinbase. If you watch my previous videos, I absolutely called all of this. So I think my take is legitimate and worthwhile. And if not, you can have what you paid for it. So just a reminder, the GBTC Grayscale Bitcoin Trust is the spot price of Bitcoin on the dailies, and it has been trading at a discount. There's a very nice parity, if you care to watch, that shows the disparity between its price and the price of Bitcoin, and is very, very tradable, if you know what I mean. Okay, earnings calendar. So this week is going to be a great earnings week, and this is the reason I think this week is going to be bullish, and the reason I think this week is going to be so tradable is that we have without looking at it, we have Tesla, Amazon, Facebook. What else do we have? We have Neo. Now I have to look at it. We have Visa, Crocs. We have Apple. I don't know how I missed that one. We have AbbVie. We have Charter. On Friday, we have Chevron announcing earnings. eBay, Altria Group. So it's just a potpourri. It's a scattered board. It's an incredible earnings week. And I expect a lot of volatility, which means a lot of extremely tradable trades. I'm not going to make a call on the FAES, but I think the FAES, well, we'll go ahead and do it. I think the FAES will be up. And there is a 3 times levered FANG ETF out there as well. But I'm going to trade the week after earnings, just like I did last week. So the point of that whole spiel was basically that we have, just like last week, we have an insane earnings week, but it's not just one sector. It's not just oil companies. It's not just pharma. It's not just tech. It's not just banks. It's all of them. So, yeah, bullish. Very, 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 very bullish. So speaking of very bullish, Everbullish wont, Everbullish dividend, Everbullish balanced portfolios. We're coming up to the end of the month. I'm very excited to get the results out to you guys on what the third-party verified performance results are at the beginning of next month. But go ahead and visit the portfolio store. If you like these videos, you can always buy me a hypothetical cup of coffee as a thank you. Whenever I was a broker, instead of charging my friends, I would just tell them to buy me a cup of coffee. So I'm allowing you to do that, but over the internet, and I'd love it if you wanted to do that and support the channel. Final things here, if you scroll all the way to the bottom, if you last all the way to the 11 or 12 minute mark where we're at now, I have my favorite options trade of the week. I'm going to tell you what the sector is. I'm going to tell you what the ETF is, but I'm not going to tell you which one of these it is. You got to go to my website. You got to sign up for the everbullish.com free newsletter, and it will include all of my trades, all of my stock screeners, my Sunday recap, and then any extra content that I put out. And hopefully it'll get you living the Everbullish lifestyle and gaining the Everbullish edge. So anywho, thank you for watching. I love a subscribe. I'm Chase at Everbullish, the Stock Sherpa on YouTube. I make these videos so that you can become a better investor, learn a little bit along the way. I also sell premium portfolios on my website for you to follow along with on YouTube. 75 bucks a pop, one time. If you don't like it, don't buy it next year. Follow me on all social media. Check out the Everbullish One podcast. Enjoy your beautiful Sunday, and let's get rich.